Okay, let's get this show on the road. Things are looking pretty good. We did some smart things. Did some pretty smart things. Wish I was able to kind of capitalize on more things, but we got some surprises today. Some stuff that we weren't necessarily anticipating. It'll be an interesting stream for sure. And we'll do some week ahead trade plans. Try and factor in monthly moves on some FX charts and look at some equity charts as well. Okay. Hello everybody, I'm Boss, Joe Boss. Welcome to another stream. Another weekly trade plan stream. Let me actually go ahead and start the event. Let's see here. Start event. Free, weekly free trade ideas. Go ahead and start that event. Alrighty. And then I'll put in the chat there a link to the stream. How about that? I'll be nice and straightforward. So this is all in the Discord. And I should probably screen share. So this is what I mean. Just putting stuff into the Discord. So we now have the stage set up. And if anyone comes on by, it'll be nice to see who shows up. Okay. So we're going to be also on YouTube doing a screen share here. I'll also screen share here in Discord. And no audio sources, all that jazz. And wow, I'm getting a bit of a visual bug. You guys seeing this? Look at that. It's like flashing green and whatnot. That is too weird. That is too weird. I don't know what that's all about. But I'll try. I wonder if anyone else is seeing that. I see one guy. I see Kari is there in the audience. Kari, do you see that on the Discord? That's too weird. Some technical difficulties here at the start of the stream. But you can see what we're going to be talking about next here. This Ukraine's top negotiator with Russia said he sees progress toward a potential peace deal with the Kremlin. Quote, "They all understand the war needs to end. That's why they are negotiating," says Budanov. He continues saying, quote, "I don't think it will be long." And there's a few more quotes there in the Discord. So again, guys, let me know if the screen share is showing any kind of graphical issues, because it's flat. There's like these green flashes showing up on my end. And I really would like to make sure that it's watchable, because I don't want to give anyone epilepsy. I don't want anyone who has a maybe if I don't know, try again. Change. I don't know. Maybe if I just do it by window. Maybe that'll fix it. Yeah, that seems to have fixed it. I hope everyone is able to actually see that. Remember, you can type in the chat, not just in YouTube, but also now in Discord. And I see you, Ani. I see you there in YouTube. Nice to see you. Yeah, no green flashes here on YouTube. YouTube is all good. This is for the guys that are hanging out here in the events stage, looking forward to some trade plans. Let's see here. Oh wow, so many posts. Yeah. Display driver, stream about it. Yeah, I don't know. I think it was maybe some kind of software issue. I am on a Linux machine, so there are all sorts of weird things that can happen. But yeah, thank you very much, Ani. I think it might be some kind of driver compatibility issue, but it's fixed now. It's fixed now. Okay, let's get into the thing that's on the screen. Okay, so let's go through at least my trades. I actually have a trade here. If I do, I believe this. Yeah, there we go. And hide the indicators real quick. You can actually see this is a position drawing. I went short right here yesterday, and I put my stop slightly in the profit. That's why there's this little tiny green bar here. And we went all the way down, and then we got this news. And it came out right here on this bar, and that's so cool. You can see how when we move this note around, see that, how it connects right to this bar, it always points to it. And if we actually move it above here, it connects to the top, right? So it always points to the bar that this piece of news printed on. And this printed in the last 20 minutes of that bar. So if we go to a 15-minute chart, you can actually see that there's a delay here. So when the news got released, this was the impulse move. And then when it hit X, when Bloomberg reported on it, it was right there. Isn't that kind of cool to see? It's a nice little feature. And also to have it on your chart provides nice context. It is quite big though. So sometimes you have to fiddle around with the visibility tools in order to hide it. But I usually don't have my chart zoomed in this much, right? I usually have my chart at 100%, and you can see how much smaller it gets, right? This is normal resolution for me. This is not zoomed in at all. That's 100%. So I go to like 200% zoom for the streams, so it's easy for you guys to actually see what I'm seeing here on the stream as well. Anyways, we did have this trade here. This trade, we talked about this one last stream, so no need to rehash that one. That one did bite me, but there were two other trades that exit out profitably that actually more than covered that particular trade. And I got out somewhere around here. I did not hit that stop. I did hit this stop, though, on Eurodollar. And here I got a great little setup, and I don't know, it had unrealized gains of about 30 pips, 38 pips, somewhere around there. And then this news with Ukraine dropped and totally reversed that move. So I'm very happy I put, once the trade got in profit around here, I'm like, I'm going to go to sleep. I'm going to go to bed. In case I don't think anything's going to happen, but just in case, let me put my stop a little past break even, you know, like 2 pips in the profit or something negligible. I'm very happy I did that. I'm very, very happy that I did that. So that's a review of those trades. And then we have two more. And then we'll get into some other geopolitical stuff. We had Aussie dollar. We had that one. It was just straight up loss. This stop was actually a bit higher. It was around here. But once I saw what happened with Euro, and this is for the trade that has happened yesterday on Euro, right? Oop. Over here. This one. By the time this trade was around here about to get stopped, Aussie dollar was trading around here. So I just manually exited there. It was only 15 pips of loss, so it was no big deal. But look how much was saved there, man. An extra 30 pips was saved there. That was a very good exit for someone who's short. It would have been better to be long. But again, you're doing the best with what you can. And I think it's important to show these types of trades. And then New Zealand had a very similar outcome, right? Getting out sooner so then you can avoid this larger drawdown. And I think that's pretty wise. No, I think that's pretty straightforward. Like, hey, if you don't think the trade's going to work out, why would you just leave the trade on all the way and just let you get stopped out? Why not just get out earlier or get out and flip? It doesn't make a lot of sense, right? So I was just, my bias is to actually stay tactically and strategically dollar long, because so many countries are going to have growth and inflation problems. We just had US CPI release earlier today, and we actually see that the rate odds for the FOMC got worse. And by worse, I mean the odds of 2 cuts this year are gone now. There's only 1 cut, I think, fully priced in now at the end of this year. And that was my expectation going into CPI, which is why I wanted to stay short here. And sure, that's a bit inconvenient. But so long I have this more strategic view of growth and inflation, and then relative growth and inflation between these different countries, that makes me do a bit of analysis that is bearish, discretionarily bearish across all these different assets in favor of the US dollar, at least for now, until growth rebounds, until the Strait of Hormuz reopens, right? Until these growth drivers actually return and inflation starts going back down from these elevated levels, and central bank rate odds for cuts start going up again, I'm going to be more defensively positioned, more risk off positioned. And maybe there's a tactical situation, maybe there's a particular event that comes around. Like, for example, let's say that Ukraine and Russia are able to facilitate this peace. Now, for years, this has always been very explicit. If peace between Ukraine and Russia does get fulfilled, we are going to see a lot of European assets go risk on. However, I would also argue that we're going to see some equities, some defense sector companies in Europe that have actually been really fantastic trades, right? If I do a little search, European defense ETF, sure. Let's see here. Encore Energy Corp. That doesn't seem like that's the one. Yeah, that's non-energy materials. WDEF. That's what we want. So if we go to a daily chart, you can actually see we went lower. We went lower down to here, higher, and a bit lower. And I believe this was on news that it was becoming a struggle to get the 90 billion euros worth of stimulus passed in the European Union for Ukraine. Because that money, while it gets sent to Ukraine, it comes right back to Europe, and it goes to expand and rebuild defense and defense-related manufacturing industries. That $90 billion is a huge mega stimulus for Europe. And actually, a bit ironically, one of the best trades right now, while it is the defense sector, if this peace occurs, that trade kind of gets put off because the incentive to grant Ukraine that $90 billion starts to wane. It might have enough support to continue and pass. There are still some hurdles that have to be overcome for that $90 billion to be paid. But it becomes far more likely, the odds increase, that $90 billion might not pass. And so all the recipients of that $90 billion in the European defense industry and related manufacturing and services and whatnot, that massive stimulus would just not happen. So it'd take a lot of wind out of the sails for some growth forecasts in a lot of these industries, because they kind of have to do a scenario analysis now. Here is our returns and our growth projected out, forecasted, if we get this $90 billion stimulus passed. Not necessarily stimulus, it's a military aid package, right? And here's the scenario and our growth and what our companies and what the sector looks like if that 90 billion euro does not pass, right? So we're going to have to do some more research on this. There's going to be a lot of equities that respond to this. What's going on with NQ? Okay. Nice, very strong rebound here. Look how strong that is. So ever since essentially, what is it, power plant day, right? And bridge day started becoming a thing. Ever since the first signs of let's get the ceasefire done, which was, I believe, Tuesday. Yeah, that was here. This is when we had the rally. So it's just these last 4 bars. And this was something from last week. The thought doesn't quite come to mind how we bounced here. If anyone remembers, I'm going to read it. I'm going to read what they have to say. But these last 4 bars here were definitely due to the beginning of ceasefire talks. And originally, there was supposed to be talks held today for ceasefire talks directly between the US and Iran. And now they were moved to tomorrow on Saturday. Very conveniently when the market's closed, right? You know, there's always a handful of guys who trade crypto, and I was talking to a couple of them in DMs over the last week, and they're saying, you know, this meeting on Saturday, all the traditional markets are going to be closed. And you know, the last several times Trump has made big announcements or the U.S. has done major things, like what they did with Venezuela and Maduro, how they went in, Operation Midnight Hammer, right? That was done over a weekend when the traditional markets were closed, right? When they were closed. But if you were in crypto markets or trading some kind of derivative of traditional markets, you were still able to execute trades. Yeah. Man, I have insider info for you. Well, I don't know if I can use it. I don't know if I could use it. That's kind of a big deal. Insider info is kind of a big deal. Legally. Don't get me uncomfortable now. Oh, don't get, well, there's no problem knowing insider info. The issue is whether or not you acted on it to profit, I think. I may be wrong, but I'm pretty sure that's the threshold. It's not are you a trader and have insider info? It's, are you a trader who executes positions on insider info? Not that info, never mind. But yeah, I think that's the actual line, right? I think that's the actual line in the sand. But yeah, let's move on. We can actually check out the ES too. And it looks exactly the same. Trump calls for a pause on all military strikes against Iran's power plants and energy facilities. Yeah, see, all this stuff can be so useful, having these little X posts just hanging around. What other assets can we check out? We can probably check out Bitcoin. And why don't we actually get into some week ahead trade plans? Look at Bitcoin. It's done a nice rally here. Nice risk on move, actually. Very nice risk on move. But the question is, are we going to be stuck in this channel? Because we're stuck essentially between 63 and 73, 74K right now. Are we actually going to be breaking the channel sometime soon? Maybe. There has definitely been some risk on rotation in the last week and a half. So I would assume that the odds of actually going into the upper 70s would be more likely now than 3 weeks ago for sure. And look, if there is peace with the war in Ukraine, and let's say ceasefire talks are continued and extended in between Iran and the United States when they meet in Islamabad, right? If those ceasefire talks are extended because they show promise, then for all intents and purposes, I would anticipate some kind of relief rally, right? I would anticipate a relief rally to come through. Now, let's go ahead and check out, maybe what should our next plans be? Let's actually check out the DXY here. So these are monthly ranges, so maybe a bit lower. And if we check out here, oh wow, this is definitely the tail. So next week, if we do go lower, I would not be surprised to see 98 hit on the DXY index. So if we see this kind of move lower in the DXY, and let's say it's in the first third of next week, that would be nice to see, right? Would this... that would actually imply that the ceasefire talks with Iran are going well. Because if the ceasefire talks aren't they don't produce some kind of immediate good news here, if the meeting on Saturday doesn't lead to reports that, oh, things are moving in the right direction, it seems like we'll get something done, and then that story continues practically daily for the rest of the week, if those stories continue to occur, I absolutely would expect 98, if not lower. But if, let's say, by Tuesday or Wednesday next week, the Iranians are not willing to concede some things, and the negotiations, the ceasefire deadline is not kind of definitively extended, then I would assume we see more range-bound trading. And we could probably use the probability pivots for that. So if we use probability pivots and we look at our ranges, the range bias, let's say bullish range bias, because as I described, that's my bias. So around, what's that, 62, 63% of the time, seasonally, the high next week comes in above R0.5. Which is actually quite a lot, but we are not in what I would call a nominally seasonal trading period. We are very clearly trading an exogenous shock, right? We're very clearly trading exogenous risk events, geopolitical risk events right now. And that's how it was with the first Trump administration, and that's especially how it was when we were trading around this time last year when all the tariffs were happening. It was following the squawk, following the news, and staying on top of it minute by minute in order to protect yourself around the changes that were occurring geopolitically, that were having these exogenous shocks on markets. So when you look at this indicator and you see these probabilities are seasonally based. There's another indicator I have that's literally called seasonal forecasts. And we load this on a daily chart, and it gives day by day seasonal bars out into the future. You just got to let it load for a second. It's actually currently loading right now. Let it load for a second. It loads all the historical data, aggregates it, turns it into seasonal data. And there you go. It looks a bit funky, actually. Let's go into the settings, and I think we need to increase the cutoff. Oh, right. There's no filter on here. I think I need it past 1990. After a year. And then we have to let it recalculate. It was calculating on every single historical bar. You can actually see it was loading like 60 years of data there. Okay. And the reason why we don't want to do that on every single chart, load all the historical data, is because it can make the indicator look a bit weird. You saw there's just some purple lines. Well, that's because if you actually look back at the historical data, like, I don't know, in 1940, look at that. That's why the bars looked weird, because this data here isn't even daily data. If you look at the date ticker at the bottom, it actually shows that it's changing by quarter or by the month. So while this is a daily chart, these are not daily changes. These are monthly and quarterly changes all the way back here. So you actually need a way in your indicators, if they use the entire chart's history, to clean this data. You have to have a setting in your indicator to actually remove some of this old data that is not daily from your chart. You can actually see you don't get daily data until the 1970s. See? You don't get daily data. This is not daily data. So all this stuff, and you don't get high-low close, open high-low close. You just get closed data. And you can see that's what this looks like for years and years and years and years and years. And then up 1986, 1985, you have open high-low close data reported. So that's why I instinctively filtered to 1990. And I think it's good to explain why that is and why you change those little settings and whatnot. Because now we have this nice, neat little table here. And this table just shows, hey, how frequently was a particular day bullish or bearish? And what were the returns for those bullish and bearish days? And then if you combine the returns of those bullish and bearish days and the frequency of those bullish and bearish days, what's the expected value? And that's what this row and column of EV is. Now you can look at all these numbers on this indicator and be confused. Or you can just look at the colors. So see where you have green in both of these columns and both of these rows? I take that as an indicator that those a generally bullish seasonal trading day. And then when you have 2 red rows here in both columns, I take that as a seasonally bearish trading day. And then when you have a mix, or it's kind of on the more neutral side, you just want to be careful, because it means that maybe the seasonal strength, maybe the seasonal pattern isn't terribly strong there. Or this indicator isn't able to extract the seasonal feature as cleanly, or the seasonal feature might not exist. So we want to look for very strong, very obvious signals. And this can definitely help with that. It's also nice having the data. Very, very nice having the data. Because then you can do things like this, right? Where you can actually see how all these expected values, how all this data in this table get displayed. Gets displayed, right? It's nice to have an actual bar forecast. You can see the up moves. So from 8 to 15. Yeah, right there. You can see generally the up moves there. And then from 17 down to 21. 17 to 21. Yeah, it's generally bearish. Yeah. So while you can also look at the chart, you can see it visually represented right there on your chart as the seasonal forecast. It's very nice. It's kind of elegant, actually. I'm very happy with it. But believe it or not, this is just an alpha. But you get access to this if you get into the trading group. You get access to all the indicators that I'm showing here on the stream when you're in the trading group, actually. But this is just one, and I don't show it frequently enough. Because right now, there hasn't been a reason to show it for a long time. We're not in a seasonal trading period, right? But when the seasonal trading periods come in the future, man, or you have seasonal effects that are moving in your favor alongside an exogenous shock, you can sometimes see amplified moves. I mean, in hindsight, you have to measure that. But generally speaking, I would consider that a decent assumption at first glance. All right. We can start with weekly trade plan forecasts here. And we can hide the chart and do this full screen thing so we have a little more screen real estate, right? It's nice to have a pretty chart. And we're on that's a 6-minute chart. We want a 6-hour chart. So then we can look at next week's ranges. So when we looked at that DXY chart, I actually thought we were probably going to end up going bearish. That is on the assumption that the talks between US and Iran in Islamabad, held in Pakistan, go well and either lead to some more points being agreed to publicly and good news being released, or even outright the ceasefire negotiation timeline being extended. If there's an extension to the ceasefire to allow for further negotiations, because the first round here on Saturday is somehow fruitful. I don't expect the ceasefire negotiation window to be extended, frankly. At least immediately at this next meeting. I would be quite surprised if that happened. But I would expect there, off the bat, for there to be some positive news. For there to be something to handle the market, so that then the stock markets go up. And we're looking at Eurodollar here because it's in the FX space. Eurodollar has a really high correlation to equity markets. So when equity markets like the CAC, right, in France, oh no, that's different. CAC right? This is the French index. You can see how well this performed. Actually, this is the announcement that the Ukrainians might be able to get some kind of peace negotiated with the Russians. You can see how beneficial it is for European equities if this gets done, actually. Now, it means that you don't get the 90 billion euro stimulus, but it also means that the current spending that's being sent to Ukraine for the Ukrainian war effort no longer has to be sent in as significant amounts. We can then move on to a different type of aid package and essentially make a Ukrainian rebuild aid package, right? A restoration aid package. That is if peace actually gets resolved, if a ceasefire starts and all that jazz. All that jazz, right? Okay. Let me get a little comfy, right? So there's things going on that are very, very important. We're covering them. And of course, France, they're part of the Eurozone, so makes sense, right? So when we expect DXY to drop, I would actually expect things to stay relatively sticky, just like this week here, where once you have a move up, you don't necessarily see a pullback, right? I tried shorting these things. I was trying to short, okay, we'll get the pullbacks and the deals will fall through, right? And so far, everything's been working. If I had the assumption that these deals would work out, way back here, it would have been phenomenal. Or actually, if I was up earlier, if I was up earlier today and trading these ranges down here, I actually could have hedged my short. So if I open up this, I had the short trade on Eurodollar up here, right? And you can, using this indicator, figure out, okay, for a given trading day, and we're on a 1 hour chart, and this indicator is currently displaying for the day where typically does the top and the bottom come in. The top is the odds of finding the top are displayed here in red and with this distribution to the upside. And the odds of finding the low are here in green with this distribution to the downside. So we found the low of today right around here in what we call the peak of the distribution. And this is what you also call a bimodal distribution. You have two peaks, right? Bi means two. So you have what you would call the bullish peak here, and then technically what I would call also the bullish peak, but it's further down, right? This is the peak where people who, especially Wayne's Pivots Pro traders, who trade something along the lines of a standard bullish chart would probably try and get trades at, because this is considered the aggressive entry. But hey, if you actually were trading a standard bullish bias here, that was your entry. And then you have confluence. So if you are using pivots and you're using these pivot point strategies, you can augment it with some more descriptive statistical indicators to help augment and refine the risk-seeking behavior you have. And I've found pretty good. It's been good. It's been a good change for me to build and use these tools. I mean, the thing, though, with the pivots is the target for this bias is way up here. And we did not hit that. We didn't. the volatility needed to be much stronger to actually hit this. So what do? Do you just hold into the close? Well, each pivot period is supposed to be independent from the next. So you don't generally want to, let's say, when your trade plan is for buying here and selling up here, and that trade plan does not work out, you generally don't want to keep that trade open. You want to maybe start fresh again in the next trading period. This is kind of getting in the way. And the next trading period is saying, hey, well, maybe you go down to here, or even more aggressively, you find your low here. Actually, that would work for a continuation bias, now that I think about it. Bullish continuation. There you go. Your stop would actually be right around here, around that peak, based off pivots. And then you'd be buying pretty much very close to right above central pivot right there. So if the trade plan for next week is to remain bullish and to have a continuation, maybe getting in around here. And this is also the nice thing about this range probabilities tool, if you also are augmenting it with pivot points. One major issue that I've always had, and that I know many traders have had for, frankly, decades with trading pivots, especially with bias pivot zones, is figuring out exactly where in this zone do you trade, right? Do we buy towards the bottom half of this range? Do we trade towards the top half? Maybe we do something where we have 3 positions, where one's right there at our 0.5, one's smack dab in the middle, and one's right here at central pivot, right? Or you can dice it into quarters, right? You have 2 kind of split in the middle, and then 1 at the top, 1 at the bottom. There's all sorts of different ways that I've seen people kind of finagle positioning for this zone. And my solution is just to use some descriptive statistics. So this is the distribution of lows for a given trading day. And so now I can say, okay, from the open, if I wanted to stick to this continuation bias, I could expect probably my low to more likely come in around here. Now, the stop loss for this bias is S0.5, and that's actually right here around the peak. But if you're strictly trading with range probabilities, what we've found that's helpful is something along these lines, where you put your stops at the troughs. So see these 2 peaks where you have this green peak here and this green peak right here? The idea is actually to put the stop between the 2 peaks, so that then once price does something, if price doesn't just go up from there and continue on as expected in a continuation trade setup, if you don't get that, and instead you see price do something like this, well, instead of getting stopped out down here based off the pivots, you're getting stopped out right here, and then you just saved yourself all of this drawdown, right? You saved yourself all this drawdown right here. It's about 11 pips, right? But if you're day trading and you're doing 30, 40 pips a day, something like that, and that's very aggressive day trading, by the way. You know, I personally, I have had much more success with day trading since using the ranges than with the pivots. But I do still use the pivots augmented with these descriptive statistics, because it's nice to see what people who are trading pivots are also looking at. Also, if there are still these icons in Wayne's pivots that show relative to the prior pivot, is this an increasing pivot? Is this an expanded pivot? Is it a compressed pivot? So this does contain some information about volatility that the ranges here do not. These are actually kind of invariant. So if the volatility starts going up over time, these don't change. This is just straight up, here's the distribution of returns for a given trading day over however many bars back you can get. And by default, it actually goes back to the very beginning of the chart. That's what this auto look back setting in the indicator does. So when I'm looking for a continuation trade plan, my line of thought is to do something along here. And that would be the nominal trade setup, right? You're going from, okay, given my expectation, let me go from the highest odd setup, which is right around here, to the next highest odds. Now, this is just for one day, right? This is just for Sunday, the first trading day of next week. If we do this and go for next week, the entirety of next week, so now we're not just looking at the distribution of high and lows for a given trading day. We're looking at it for a week. You can see we still have the same peaks. The interpretation is actually exactly the same that you would make on day trading. Now we've just extrapolated it for a week. And what's also nice is when you want to interpret where the tail risk of your distribution is, you can get very clear cutoffs. So in a week like this, where we get news that's very, very important, and this is the ceasefire stuff, maybe I should add another little note here from X, from Bloomberg maybe, discussing the ceasefire stuff that was happening around here on Tuesday, because that's when the ceasefire was agreed to, and the meeting between the US and Iran was also agreed to. That's why we had this jump. My cutoff, and the cutoff I did get out at, was right around here. So if I could, I don't like moving these drawings. You see how I lock them? I want to keep them locked because I like to display my expectations over time on my chart. I don't like to forget my history visually, because I still have my, my trade logs. It shows the numbers of where I got in and where I got out, and what time I got in and what time I got out. But you can kind of disassociate from that, especially if it's out of sight and out of mind, right? If you're not every now and again going through your trading history and kind of checking up on it, or looking at a chart of your P&L, this helps with keeping tabs on things. This does help with keeping tabs on things. And I haven't been doing too great on Eurodollar recently. I'm sorry, but you know what? I've been doing well on other assets, and like I've showed, especially that New Zealand dollar. Maybe I shouldn't show this chart. Maybe I should show the chart that I'm making way more money on. But you know what? It's very important to do analysis on some of the most highly traded assets, on some of the assets with the greatest volume. It's very important. So, and again, when you're doing geopolitical stuff, it's important to know how it impacts these assets and how it impacts trading expectations. So then you can update your own expectations and make your own trade plans and update your expectations based off of that. Ah, man. So I got out around here because this is my cutoff. You can actually see where, on the indicator, we established that these are the peaks where the odds are highest of finding the high for a week. And then the odds start decreasing, and you can actually see those odds on the right-hand side here. They go from 5% to 4% to 3 to 2, 2, 2, 2, 2, 2, 2, very low twos. Well, as the odds decrease, the colors change. So you go from this red color to this gray, and then to a more opaque gray for really low odds. And it's around here that we decide the cutoff. And you could probably cut the cutoff right around there. That's what I did with this trade, right? Getting out was a really, really good decision there. And it saved me pretty much all this drawdown. Now, I still had a couple more trades in here. But I'll tell you, I did not lose 86 pips between the other two trades that I stopped out on. Like, this saved me a lot of money. Just being able to identify the tail and say, okay, when you trade at these levels, you have to be aware that you can experience continuations. Unless you have a very clear catalyst for a reversal, which is what I was doing actually right around here, this little trade. And what I was trying to catch also on this trade was, oh, the meeting with Iran isn't going to work out. Well, it turns out it did. And I'm very glad with how I've positioned myself and how I've, even though I was wrong on these things, how I stuck to my guns and didn't wreck my account, right? It's okay to trade discretionarily. It's okay to, do things discretionarily in markets. But it can be really hard for some people to measure themselves in metrics and all sorts of different ways, but especially with risks. To stay on top of all this information and being very willing to lose the money you put on the line with every trade. I mean, look, everyone and their mother talks about, oh, if you lose 10 trades in a row, what should your risk be so you don't blow your account, right? But it's very, very important to follow those types of rules, to know those types of rules, to do your own research. Look, generally speaking, if I do 0.25% risk, 0.1, 10 basis points of risk, or a few percent risk, you want to make sure that you're doing something when it comes down to making sure you're not losing money when you are losing, to minimizing your losses, and then maximizing your winners. It's all very straightforward and it's all very obvious, right? It's all very obvious. It's just about the consistency to actually do it. And it's kind of sad when, you see people who know what they're supposed to do. They know, oh, I'm supposed to do these things and this is my risk and da-da-da-da-da. And then they just don't do it. I understand my risks and, okay, I'm doing them. So I'm actually quite satisfied, even though these are losing trades. I've been doing this for long enough that I'm quite content. There are a lot of people who say don't get emotional when trading. I don't necessarily agree with that because, while for a lot of guys, bottling up and not expressing your emotions is fine, I find it actually to be quite helpful to, be expressive. I find it very, very helpful to be expressive. Because the Stoics will say, don't try and care about stuff you can't control. And yeah, I agree a lot with what Stoics have to say. But a lot of Stoics are just, they take it to an extreme and they become cold people. They become unfeeling people. They become indifferent. And you can't necessarily be those things if, first off, it impacts other things in your life, right? If you're just doing those things to get better at trading, there are better ways of doing it. Because If you're cold and indifferent and then you come home or you go and interact with other people, they're going to feel that, and they're not going to feel so welcoming. They're not going to want to hang out with you so much. It's a bit depressing, right? But if you're like, okay, yeah, sure, there are some things I can't control, but if I just do these things, I can chill and do and think and feel how I want. Just do the things. And the more you stop yourself from doing whatever risk strategy you have to protect yourself, the more excuses you put in your brain, the more overthinking you do, just stop. Just force yourself to do it. Just endure for a little bit and rewire your brain a little bit. Sometimes you have to force yourself to do something to get your brain to learn the new habit you're trying to create. So, I didn't mean to get into some trading psych stuff. I think most trading psychology is really, really, really bunk. Personally, I just think, okay, just learn psychology, just learn philosophy, and then try and apply it to trading. But there's no specific psychology for traders. There's just psychology and philosophy. And then there's a lot of people who actually really don't like psychology at all, and they just want you to focus on philosophy. There's a wide range of views and a wide range of opinions on all these different things. And if you try and incorporate what everyone ever said about any of these topics all the time, it's just gonna, your mind is just gonna be totally, kaput. My approach is just do what has worked for other people and find out what those things are, and then do those things consistently. And if you have a hard time executing those things, figure out why and overcome them. And if you can't overcome them, it's time to try something else. Like, don't overthink it, right? It's very straightforward. Very, very straightforward, right? Anyways, we can maybe do something on NQ. NQ, wow. That is very clearly. Wow, that's so cool. Did you see that? How it tapped the low here? I think we mentioned this on one of the streams, how this thing just tapped that low. Man, that's so cool. That's the low for the week. And then there's the peak. There's the peak in the ranges. And then literally just holding for 2 days. That was a great trade on the NQ, man. Man, that's 1,200 points. That's so much. That's a lot. That's a pretty good week. That's a pretty good week. That's, for a lot of people, that's a pretty good month. But that is fantastic. That is really fantastic. Actually, I think I had a brain fart there, and I didn't do the trade plan for next week here. Okay, if we're expecting continuation, it's probably going to look something like that next week. And I'm thinking we stay sticky towards the end of the week. If news continues to be fruitful for the negotiations between the US and Iran. Also, if we do get any follow-ups, gotta stop with the pen, gotta stop drawing with the pen tool to move the chart around like that. If we get any continued news, any follow-ups about these negotiations with Ukraine and Russia, and maybe they actually finally reach a ceasefire. Now, I know the Russians, and especially the Russians, have said we don't really want a ceasefire. We want to go straight to a peace deal. I think eventually it'll come to a ceasefire. Once like the outline of a peace deal is agreed to, so then they can just meet. Because how do you really do that safely? You gotta have you have to have some kind of ceasefire. So when a ceasefire, in my opinion, right? So when a ceasefire is announced, that would be great. Or if there's just more posts like this saying, hey, we're making more progress, we're getting even closer to some kind of ceasefire or peace agreement. And if we get a follow-up like that next week as well, on top of positive developments with Iran and US negotiations in Islamabad, oh man, yeah, we'll go up another 100 pips easily, I think, on euro dollar. And I might have to change my expectation to be a bull here. I might have to finally flip, right? Because a lot of my expectations over the last 2-ish weeks is that things would just continue to get worse. And I might want to tactically switch to being bullish. However, growth and inflation is going to be a problem for a few months, if not all the way up to the end of Q3. So I don't want to overextend my bullish expectations, right? There will be relief if these good things continue to happen. But then once they're concluded, the work of rebuilding energy infrastructure and establishing the energy shipping lanes, again, getting all the ships out and refilling the new ships and assessing the new level of capacity and what capacity has to be rebuilt and how long it will take to get up to prior levels of energy capacity in the Gulf. It's going to take some time to assess those things. And once we have a picture of that, well, we can probably still assume, given the current information that we have, inflation is going to be elevated for some time in a lot of places in the world. It probably won't be as high as expected if by end of April, at least the war with the United States and Iran is over and negotiated and agreed to. Got a little itching there on my neck that made me lose my train of thought. But it's getting comfy here. I don't want to stay risk on the whole time, because even though inflation might not be catastrophically high in those positive scenarios, or growth catastrophically hurt in those scenarios, the consensus is that inflation will be elevated and growth will be lower than what was expected at the very beginning of the year, before Operation Epic Fury began. So we're going to be looking at relative rates of growth between countries and relative rates of inflation between countries over the following 6 months to really assess what currencies are probably going to have the best momentum. And then from there, also look at rate hike and rate cut odds and hold odds as well for all the central banks, central bank rate odd differentials. We can also look at yield spreads. Let's not forget our good old yield spreads. Wow, look how positive that is. So if we look at things for the month, if we do see more positive expectations and we see yield spreads continue to get positive, yeah, mid 1850s seems reasonable. And from here, I could make up all of these little losses here easily in a trade that makes me 150 pips. If I flip, I could be wrong. I'm literally probably saying I could be wrong for this entire time for all these trades. And I flip once and it continues to work for the rest of the trend to whatever the month's high is. And I make all those losses back plus some more. because I knew what I was doing risk-wise, because I was staying on top of news. I was staying on top of my research. If you'd like to stay on top of the research with me, I encourage you guys to actually join the Discord where we do most of this trade research. If I zoom in here, and this is the event stage for today's event, you can actually see here's the Aussie fuel shortage, recession trade forum. Singapore PM says he assured the Prime Minister of Australia, Albanese, of continued refined fuel supplies from Singapore to Australia. That's good to see. Here's the 2026 Iran commodities crisis. Anything related to commodities that could be impacted by the Strait of Hormuz. So all those conditions I mentioned not even like a minute or two earlier, those are things we're going to be watching in this thread. And if you're on X or you see an article on Reuters or Bloomberg or somewhere, or you have your own personal commentary, this is a place to share that. And this is a place where I'm sharing the things that I find. So this is a research thread if you want to do research with a group of people who are, doing the things that I'm doing here on their own. This is a nice place to collaborate. We also have the research forum. You can see all these crowdsourced outlooks. Look at all these crowdsourced outlooks. All these different institutions right here. You don't need a very expensive subscription to get outlooks from institutions. You just need to know where to look. The Trump Watch thread. We got some new posts here. Is there anything? These are just endorsements. Endorsements. Oh, that's actually on Hungary. Okay, he's endorsing Viktor Orban again. Okay, more endorsements. So Trump is just endorsing people out the wazoo ahead of time for the 2026 U.S. presidential midterms. Or not presidential, the U.S. midterms. And then here's the thread we have in the research forum for midterms. You can see right here, going all the way back. I think we've had this thread set up for a couple of years now. So the link to this Discord is in the description, and it's free to join. If you want access to the indicators, though, that is part of the trading group. And you can join the trading group also through WAP, the link in the description. And you can try it out too. And now when it comes to this plan here on Eurodollar, yeah, it might be time to flip next month and expect a bullish continuation to these higher levels here. We can actually use another indicator to help with that information called the timing dots. We may need to do a little bit of adjustment in the settings. I don't like having indicators where you have to do this, where you have to finagle with the settings. So I'm going to be working on ways to automate this, but for now, we'll do that. So let's see here. Given this low for the month, if that is in fact the low for the month, where have following tops for the month occurred? And this is saying that there's a cluster of tops that occur around here, around 118. But I'm on the more skeptical side of a continuation of good news continues to progress. So maybe actually tapping 119, like this cluster of dots up here, might become more reasonable. And considering we were saying maybe in the mid 118s, 50 more pips might not be that big of a deal because these are expected tops, so top wicks. So yeah, if we're trading at 118 by Thursday, Friday next week, I would be more inclined to anticipate 118 sometime 119 rather the following week. And then look, you have this big cluster of dots around 120, above 120 in the final week here. So you could have a really serious run up. There's potential here. Given this low, finding similar lows, this is where we've had similar lows before. So I would not discount hitting 118 and would not discount hitting 119. And I would, I'd put low odds on actually hitting here because you can actually see it's in the tail of this distribution. But you start trading at 119 and you're dealing with very low odds, and it can easily turn into a slippery slope to tap 120 at the end of the month. So there's still plenty of room, let's say, even though I've been wrong for this period of time here, to change my expectations and make money in the future. So I hope that was insightful, and this is a nice little trade plan, nice example here on the euro dollar. I'd like to cover more assets, but I think I kind of need to see more people in the chat. I mean, I see Jose in the YouTube chat, and we can go ahead. I'm going to move this over to my other monitor. Zoom out because I remember I zoomed in on the stream. And I can check the chat. Yeah, no chats here in the event stage. So things are pretty quiet. Things are pretty chill. And for all intents and purposes, I'm very happy with the analysis I did on the stream today. I am looking forward to a nice, relaxing rest of my day. A nice, relaxing weekend. I have some notes that I have to work on. I read outlooks from some institutions, and I make my own personal notes just of what I think is most important, going through those notes, those outlooks. And from there, it helps me set better expectations, or at least understand the distribution of expectations that different people have on many assets for several different things. And sometimes you'll learn something new. Sometimes you learn some very important bits of information that you weren't paying attention to that really meaningfully improve your expectations. So I really like to prioritize reading outlooks and commentary from these institutions. So I'll be doing that a bit for today as I hang out with people on the Discord and hang out watching maybe some streamers of my own that I like to watch. And then I'll maybe continue or finish my notes over the weekend, and it'll be another trading week. And we'll see if I end up flipping. We'll see if I end up flipping here on the euro. We'll see if I end up maybe catching trades in some other assets than just FX. Who knows? I'll say thank you guys very much for watching. Hope you guys enjoyed the stream, and I will see you all in a